Hello Sector Watchers, welcome to the show. This is the 62nd episode of Sector Spotlight, which will air on Tuesday the 12th of January, and I'm recording it on Monday the 11th. My name is Julius de Kempenaer and I'm your host for today's show, as usual. And I'm coming from Amsterdam in the Netherlands, where it is especially cold and rainy. We don't have any snow yet, but it's very cold and very rainy, so I'm glad I'm inside. If you have anything to say, any comments or any questions, please do not hesitate to send me an email or simply follow me on any of the social media channels and connect there. Love to hear your input and I'd love to engage with you. For today's show, we're going to go talk about the current rotations in the various asset classes, US sectors, and maybe if we have any time before the break, we'll talk about a few other RRGs and things that we see going on there. And then after the break, I'm planning to talk you through and review the current suggestions, trade suggestions that we have in the long-short basket that we have been maintaining here on Sector Spotlight and in my RRG blog. So let's start the week with a view at the asset class rotations. As usual, on the left hand side I've got the asset class RRG up there, and it's ranked on performances here, and it's the last 5 trading days, so it covers last week's trading. And pretty big change, very good week actually for commodities. They are really coming back now, so I think we need to we're going to see more of that in the coming weeks. And we're going to reassess what's going on the weekly charts there, because it could be a longer term rotation turnaround in the making. Stocks had, despite everything that happened last week in the US, still a pretty good week, up over 2%. The balanced index fund up 1%, and that means that fixed income related asset classes were underperforming and actually negative. Government bonds down 70 bips. Corporate bonds won 7% and real estate minus 2.2. We had high yield slightly up, and the US dollar lost some ground with 20 bips. Now if you look at the rotations here, now remember that is a daily RRG, so it's the short-term trends that we're looking at. We still favorable moves for stocks, for both commodity indexes, and you see that during last week, because this is a 5-day tail, so somewhere on Wednesday, Tuesday, these tails here started to roll over and head further south on the momentum scale. So all in all, still pretty good, strong lookout for stocks and surprisingly enough for commodities. Now, if we go to the right hand side of the screen, we have the US sectors, and pretty big spread in performance, I must say. Generally strong week for energy, up 9.3%. Compare that with a loss of 2.5% in real estate. That's over 11, almost 12% spread between two sectors. So that you would argue that sector rotation is taking place, and overweighting, underweighting, going long, short in sectors and stuff actually could make sense. Materials doing well, discretionary, financials. Healthcare, these were the sectors that we talked about on the longer term time frames as well, doing pretty good. And now we have industrials slightly below SPY, and then technology on a relatively bad week, still picking up 60 bips, but relatively doing not so well. It's the only tail that's inside weakening, and it's now rapidly rotating towards the lagging quadrant. So especially in the near term, be very careful with technology, and also the longer term is not looking too good. Communication services continued to deteriorate, and so did utilities, staples, and real estate, which are all on the left hand side of the graph. I'm going to leave the asset classes for what it is right now, and I'm going to bring this chart to the left so we can have a better view, and I'm going to bring up my Sector Spotlight chart list and look at a few sector charts with you. So I'm going to skip a few because we're going to look at them when we talk about the long-short basket. So I'm not going to do materials, not going to do communication services, not going to do Well, the first four we're actually going to talk about on when we do the baskets. So let's start with industrials, picking up a little bit there, moving into the improving quadrant, and you can see why. It's just dipped here. It's about to move back up, and you see this very nice consolidation pattern inside the uptrend. The only thing that's slightly worrisome is the fact that we're breaking this trend line, but I'm giving it the benefit of the doubt for the time being. So industrials looks to be on the way back. I need to do this on a weekly chart, by the way, because we're looking, maybe if you make the same mistake that I just made, we're looking at a weekly chart on the bar chart, looking at a daily on the RRG. That's not going to match up. That's not a good thing to do. So I need to switch this one to a weekly chart and then bring up my industrials, and you'll see that it looks much better. And so I was surprised because I knew that industrials was actually a pretty good sector. And if we zoom in here, then you can see that this is actually, it's a very short tail. And you know that short tails means that it's a stable trend, and it's on the right hand side. So you mean that it's a stable trend on the positive side of the RRG, so in a relative uptrend. And you can see that when you just play around here, you see that rolled over, lost momentum, dipped here, and now that tail is like it's compressing, it's getting narrower, and that means that it's losing its downside momentum, just staying there at that 100 level, and then, you know, almost ready to pop, I would say. And that's what we see here. That's that leveling off of those two RRG lines, that's causing that shrinking of that tail. Now with this break on the price chart, I'd say that industrials are well positioned to move further ahead and back into the leading quadrant in the next few weeks. If we move to technology, then we see that here on the weekly, just like the daily, it's also moving to the left, almost crossing over into the lagging quadrant. And if we bring up the price chart that belongs to that, and you see that we have that upward break. There's not a very aggressive follow through, so that's slightly disappointing, I would say, especially on a relative basis, because technology pretty much did nothing for the last 5 to 6 months. You can see that the RS line here moved in that very narrow trading range. That caused the RS ratio line to come down, and RS momentum to very slowly, gradually move below 100. And this looks ready to move into the lagging quadrant right now, which simply means that there are now other sectors taking over the lead from the technology sector. So that is what the RRG is showing us right now. Obviously, we're going to monitor that going forward, but at the moment there are other sectors in the S&P that are doing better and much better than technology. If we go to staples, that is, you know, we've talked about that previously, well inside the lagging quadrant, continuing to weaken, and that is underscored by the chart here, where you can see that that break below support in relative strength is continuing. Both RRG lines are pointing lower, and you can see that you know, the price is holding up, but it's not able to push beyond, and it's look as if we're getting a new resistance level into place, say around 67.5. Not being able to push higher. I'm not going to bring up an RSI, but I really don't even have to look at an RSI to know that this is building up some negative divergence with oscillators. So especially when you will see staples, let's say, go to 65, below 65, and start accelerating lower, that's when the relative strength will continue to deteriorate further and push staples further into the lagging quadrant. So better to stay away for the time being. Real estate, pretty similar. If you look at the big picture here, then it is the weakest sector in the S&P 500. It's the lowest reading on the RS ratio line. So real estate, one of the sectors to avoid, and let's bring that one up on the chart so we can see how that looks in price terms. We've been talking about this trading range for a while. Didn't push higher, and as we said, is now moving to the lower end of that range. levels around 33.5, 34, 33.5. Relative strength stably, that's not a word. Very stable downtrend, and both RRG lines moving lower. So again, a sector to avoid. Utilities did do pretty well, but rolled over, and it's still that same image with that higher highs, higher lows in place, but just simply not strong enough. So despite the fact that that chart doesn't look all that bad, it's just not as good as the other sectors that we're seeing, and it's one of the sectors that is well below its all-time high, and not in an uptrend on the monthly chart as we talked about in last week's show. So for now, on the weekly chart, relative strength broke below its previous low, pointing to new lows, moving to new lows in relative strength, pulling the RRG lines lower. We go to healthcare. That is a stable trend. We saw industrials on the right hand side very stable. We see healthcare on the left hand side in improving but lower. And if we do this rotation, then you can see that that improvement pretty much stalled, and that tail started to deteriorate and shrink, and it's now starting to move lower and almost ready to cross over into the lagging quadrant. I have to say back into the lagging quadrant, because that's where we're coming from, and it's happening despite that upward break. Now what we have to wait and see is how fast that rotation will move, because the shrinking means that it is stable, and it also means that it's easier for a sector like this to turn back up, because there is not a lot of power behind this move. So this is where it's stable, and you can see that it picked up some support here. The trend is still lower. There's no real confirmation of a new uptrend. Our G lines are moving lower, but this break to new highs is a positive thing. And if that continues, if we can keep up that price momentum, then it will eventually work its way through to relative strength and start pulling this XLV trail around. So we need to keep an eye on that in the next few weeks. For the time being, it's definitely not the strongest sector out there. And finally, we have discretionary, which is inside weakening, picking up a little bit of momentum there. And let's bring this one up on the chart here, and you see that we put in a new low, and what we need here is this low to hold up, push relative strength beyond its previous high, continue to move higher on the price chart, and that will eventually hopefully create a new low in RS ratio. If it's going to work above the 100 line, I'm not sure, but if this uptick in momentum can continue, then we can see discretionary roll back, maybe with a short stint through, lagging back towards the leading quadrant. For now, I think the sectors to watch on the upside are definitely energy and financials, with bigger momentum, and we have materials and industrials here as very stable uptrends to keep an eye on. And I want to do two more quick RRGs because I think they're interesting. One is the growth value rotation. What we see there is that value is now crossing over into leading and growth is into lagging. It's been a rotation that we've been picking up here in Sector Spotlight a few times over the last few months. And you see that there is a very nice big rotation going on in favor of value. So as a matter of fact, you can see that even value stocks can drive the general market, i.e. SPY, higher. And that's what's going on right now, and it looks as if that trend is going to continue. So value over growth for the near term. And then another RRG that caught my interest is the RRG for international markets. So putting the US into international perspective. That's this one here on the predefined one. And you can see that the S&P is now actually moving into the lagging quadrant. It's moving away from the center of the chart and now actually moving into lagging. So it means that there's a couple of other countries that are pretty interesting. It's Russia moving rapidly towards leading, but also Brazil, very interesting market. And if we bring up the chart of the Bovespa, that's dollar BVSP, then you can see that that actually broke to new all-time highs. And that always has my interest, because that usually creates a pretty good risk-reward trade, because your downside is well protected around 120 and your upside is, we're in uncharted territory, so it's very hard to say where I'll go. But I think that that is a very interesting market, and so is Mexico, the Mexican bolsa. So we have MXX, and you can see that that is taking out an important resistance level as well. And finally, the Nikkei is interesting, and there's another one, that's the Kospi. So Nikkei, you see that that is starting to move higher, and especially on a relative basis, because that Japan has been underperforming the world and especially the US for a very long time, for years and years and years, and that now seems to be moving around. And the other one here is the Kospi. That is also, so these Asian markets are definitely worth a bit of our time, and there are plenty of ETFs that you can use to actually play these moves. Maybe this one has gone a little bit too fast, too far. Compare this break with Brazil. You know, if you look at the chart here, the RRG, you see Brazil moving into leading, and you see the Kospi, and then you see exactly why Kospi is so far ahead of Brazil, because the Kospi has already made that move and Brazil is about to start. So out of these two, I'd say Brazil is one of my favorite markets at the moment. And again, there's plenty of ETFs that you can use to play any of those moves. We're going for a quick break right now. We'll be back after 30 seconds, and then we'll start looking at the long short basket. So stay tuned. And welcome back. We have about 11 minutes to go over a lot of stuff, so we better start going. The long short baskets, the way we got into the new year, and the last time I updated the long short basket was in this RRG blog article dated the 22nd of December. If you haven't read it, please go back so you'll be completely up to date. And you will see the overview and some additions and some changes, and these are the names on the long side, and these are the names on the short side that was the last update. So ETR and PG were the latest additions on the short side of the basket. Now let's bring up I'm going to start on the short side because I don't have any changes there. So if we look at the RRG of the current holdings on the short side, they're all pretty much what you want to see from stocks that you're short. Inside the lagging quadrant, there is one that needs our attention. That's Intel, which is in the improving quadrant at a good heading, but at a very low RS ratio level. So I'm going to bring up the chart of Intel to see what my thoughts are about this. And it looks as if it's, sort of bottoming out here on the relative strength chart, but it's still below, sort of below this previous low, and this price chart is still showing a series of lower lows. The lowest or lower highs, I have to say. The recent lows are at the same level, maybe slightly higher. So this is one to watch. Because it's at this very low RS ratio level, I'm going to give it the benefit of the doubt for the time being. So I'm going to leave the holdings on the short side of the basket unchanged. And if you see the performances over the last 5 weeks, they are all below the performance of SPY. So they're pretty much doing exactly what we expect them to do. Now, if we go to the long side, that's a slightly different story. So here are the holdings on the long side, and Again, doing pretty well. We have a few that are below SPY over the last 5 weeks, and that's what they're all on the right hand side, so they're all still pretty good, but we basically want them all to be above SPY. That didn't work. So we got SEE, CTSH, and XLC below SPY. So those are the names that we need to take a closer look at. So let me do that here. And I'm going to start with CTSH, Cognizant. And what we see there is that this stock tried to break two new all-time highs. That was the reason why we picked it up, why I picked it up. Because it was breaking above this horizontal level in relative strength. Now it's rolling over. Pretty much that break is failing. Here is not breaking and this one is failing. And there are so many good picks out there. So I'm gonna say goodbye to CTSH. That's gonna be removed from our list this week. And then the second one that is pretty disappointing is communication services, the sector. We had XLC ETF in the basket. That didn't really follow through after that upward break, and you can see relative strength deteriorating rapidly, now moving towards support and relative strength with the RRG lines moving lower. So this one's ready to actually move into the lagging quadrant. Pretty much no reason to keep this as a long position any longer. And then the other one that is there is SEE. And I'm going to give that one the benefit of the doubt, and I'll show you why. Because it is still holding up above that breakout level, and relative strength is failing, but we could still break above that. We're still at relatively high RS ratio, but especially because it looks as if we're working our way higher. So I'm going to give it a little bit more leeway for this one to move and potentially turn around back up to leading. So SEE is going to stay, and XLC and CTSH are both going to go. So we need two new ideas for our baskets. And looking at the RRG for sectors, there are two sectors that can provide us candidates for new long positions. The one is energy, and the other one is financials. And I actually want to point you to an article here, which is actually a DITC. So if you don't read that DITC blog, please look at it from time to time, because this one is dated December 10th, and I was talking about MTB, and the reason was that financials were almost moving into the leading quadrant, and MTB was about to break to new highs. And if you look at MTB right now, you can see that worked out really nice. So that was a pretty good pick. We're not going to do MTB now, but we're going to look at the financials sector. So we're going to look at financial stocks as potential gains. And there's actually, especially the banking group is doing pretty well. That was where MTB was coming from in that DATC article. But if we look at banks, then you can see that there are actually a number of banks that are doing pretty good. Citigroup's pretty good, Key, Wells Fargo, MTB, that's the one that we just showed. GPM, not as good as Momentum, this one don't. Here BAC, pretty good. And then we're going into the weakening quadrant. So there's quite a few banks that are performing pretty well. Can't go over all of them, but the one that I actually picked, I've analyzed the individual charts, and the one that I really like is Wells Fargo at the moment, because it is moving into the leading quadrant. This is the chart against SPY, and what we see here, and that's why I like it, is because it's actually coming out of a long downtrend, and it's ready for a turnaround. So it's not a stock that's breaking to new highs. This one is actually coming out of a downtrend, so it's got tons and tons of upward potential until the first resistance level that comes in around 37. That's already about 10%. But if this really is a turnaround in relative strength, there's potentially much more to the upside, and we just moved into the leading quadrant. So that gives us a little bit of air to breathe, so to say, a lot of upward momentum that we can actually work with. Now, the second sector that is interesting to keep an eye on, or to look at new picks for our basket is energy. And if you look at energy, then you can also see some sort of a split, and you can see that the equipment exploration production and the oil equipment services group is doing pretty well. So if we quickly go over a few of those names, we see BKR is actually rolling over. That was one of the leaders earlier on. But here you see FTI moving. We see Halliburton moving back up into leading. That's good. We see NOV moving there. We see FTI. That's the one. I need to go down. What am I doing? Whoa, here. These are the ones that I need to look at. So SLB, BKR, EL, NOV, FTI, and now we're down there. Again, I looked at the individual charts, and the one that really stood out for me was actually FTI. Let's have a look at that chart here. And again, just like the Wells Fargo chart, the VFC chart, this is actually coming out of a long-term downtrend. So FTI completed a long-term low. Look at this trading range. That was like 8-9 months, pretty much all of 2020, and now it's breaking out. So we got a very nice technical signal, just like that. We have some resistance here from that gap area, but because of this break, I expect that to be taken out very easily, or relatively easily, and then move higher towards 18 and potentially higher. So we're looking to turn around this downtrend, and you see that the relative trend is also moving higher, coming out of a sideways downward move, and you see that the RRG lines are picking that up pretty nicely, and there is plenty of room from a relative point of view to actually move higher. So FTI Technip FMC is my pick inside the energy sector to move higher. So WFC, FTI go on my list of long positions for the long short basket. And if we wrap that up, that means that we now have FCX, IVE, SEE, XLB, FTI, WFC on the long side, and we have Adobe, Facebook, Intel, IVW, that's growth, ETR, and PG on the short side. And a quick look at the performance of this basket that I'm maintaining here since we started it in March. We were pretty flat in November and December, but we had a pretty good start in the new year. About 5% this year already, and altogether about 25%. So pretty pleased with that so far. And ladies and gentlemen, that concludes this episode of Sector Spotlight for now. I hope you enjoyed the show. If you did, don't forget to give us a thumbs up. And also don't forget, if you've got anything to say, use the comment section below this article, or send me an email. I hope to see you back next week at the next episode of Sector Spotlight, every Tuesday from 10:30 to 11 a.m. Eastern. Stay safe.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.